Okay, this project actually is an idea of a guy called Philip McCollum, and this is the guy who worked with me on that project, perfected by me. And I'm going to ask a very simple question here. And there is all kind of implication. We'll see the implication in 1 second. So, cash, accounts receivable, accounts payable, inventory. These are the accounts that you audit, that you issue opinion that these are fairly stated. Okay? Cash flow statement, income statement, revenues, and et cetera, et cetera. Now the question is, if you audit one account, does it have any bearing on the other accounts? Like, for example, you make a cash sale. Okay, a cash sale, what does it do? It affects cash and affects sales. If you examine every single cash transaction, you are actually affecting sales, receivables, etc., that have this double entry type of thing. And the basic question here is, by doing a complete audit of one particular account, how can you reduce the amount of auditing that you do on the other ones, because you already did some validation? It's a question, it's not answer. This is a question. So let's talk a little bit about this, implications of this. The role and strength of sequential evidential support or denial. Okay, so what does it mean? Is how do you join different types of evidences? You examine cash, then you examine the receivable, you add them together. Are they additive? Are they multiplicative? Is there any other function? And this is actually kind of an old statement of what we started talking about here is data evidence. It's basically dealing with the rules of evidence in an automated environment. So once there is evidential examination of particular account assertion and other equation, is there influence over the following ensuing assertion examinations? Meaning, do one account evaluation, assertion is, say, this population has integrity. Okay, assertions are things that you test. The question is there a residual effect? Is this an important question? Auditing one account, does it affect the other accounts? Very important, because if you can establish that there is an effect, you can audit less, spend less money. So it's a very important question. There is no lot of literature to guide you on this. And this is actually asked by Phil McCullough, who's a practitioner. And so this is kind of one type of effect. And then is how strongly it affects. Tough to answer, correct? Next one. Is one related to the other? If 80% of my entry are cash sales, there is a high relationship with the cash account and the sales account, 90%, even higher. Okay, but there is still 10% residual. Now, if you know that 95% of your hamburger stand in the corner here of Rutgers, everyone pays cash. They don't even have a credit card machine. Okay, but there are some other postings in that sales account. Okay, so if you go and verify your cash account, you have also verified 90% of the other account. But those 10% could be material, could be an invention against the IRS or something like that. But the risk is much, much less. And there's a guy called Bob Sterling. He was a professor at the end at Rice, but before that he was at Texas and etc. He was one of the grand thinkers. He did this monograph on measurement and etc. etc. And Bob Sterling published a thing called the Scholars series of books. And in one of them, one of my first publications, he called it the Taxi Cab Company, and basically brought about 10 people from different universities to Rice and said, imagine a taxi cab company, and I think that at that time they said only does sale, there is no credit cards. Do accounting for it. And how would you do it? Trying to kind of go out of the method that we do today, or at least think about it. So I did an inflation accounting study because I've come from Brazil and there's a lot of inflation there, so I kind of showed the effect of different valuations. But the reason I'm telling the story is it was very educational to see people like Ujajiri, or I can't remember who were the people in the conference, but who were very famous accounting professors except for me, and doing their own approach to attack a problem. One did very analytic, the other one was very kind of traditional audit, and etc. etc. If any one of you interested, come and borrow the book from my office. I don't think they even have it digitized at this moment. We could cut it and digitize. I don't think anyone would mind it. Okay, so this was second. And then what does affect it? And I already explained to you what affects it. At least one thing that affects it is the distribution of the related entries. If it's 90% debt double entry, what is the distribution of the other entries, etc., etc. And then there is this kind of network effect, because there are entries here, there is entry here, here, and here, and they kind of relate to each other. And if you verify this and this one, maybe you don't need to verify this one. No one has done this. I don't know all the literature, but I'm pretty sure no one has done this. Okay? Okay, do you know what a halo effect is? Halo effect is, if you are a saint, you think that everything you do is saintly. Okay? And that's called a halo effect. You know, companies that, I don't know. I was going to give an example, but it's not a very good example. That's a halo effect. If you find something is right, then you will think the next one is right. And this is a question, maybe a more mathematical way to call it, is there is a high correlation in your judgments. You know, when I was just describing this, I hadn't thought very carefully this, and actually this network of evidence, whereby there are entries here, then this account enters here too, and then this account has enters from there, is actually might be a nice mathematical model that you can develop to create some kind of strength of evidence number, probability type of thing. It never occurred to me. It's a nice analytical thing you can just occurred to me. Can a model be developed to weight the strength of evidence based on progressive interrelated variable result? I didn't formulate that, what I just described, but actually a network model. So can a weight of evidence dashboard be developed? That's for you guys or anyone. Can we add the cost of obtaining evidence to it? This is also very interesting analytical thing, is creating an optimization model of the cost of evidence. Can it be optimized? Can a normative model of cumulative order be developed that actually states a rating of the strength of evidence? You know, one of the things that always bothers me in accounting and in auditing in particular is you give an opinion. It's either yes or no. It's actually you never issue a disclaimer. Textbooks have an example of disclaimer, but have you ever seen a disclaimer? A negative statement, not a disclaimer. You send the disclaimers, of course, you see, I haven't audited this piece of the business, or etc. But a negative opinion you never see. You see is an opinion with contingencies or a clean opinion. But it always bothered me that it's 0 and 1. And there have been articles, I have argued a lot, that we should issue ratings. And when you go to internal audit departments, you actually see ratings from 1 to 4, etc. But external auditors never do that. And interestingly enough, recently I started hearing, in this meeting we had last week with the Auditing Standards Board, I started hearing the idea of potentially a probabilistic opinion. They didn't say it in those words, but that's what I heard. So this is one. This is and by the way, I think that much before radar we did this until I changed it. And actually this might be some kind of probabilistic thing on strength of evidence. Okay, and I'll put some references here. You'll get the slides. Can you remind me to give you 2 slides, etc.? Okay, this is also something we figured out a little bit earlier, and this is measurement and evaluation of controls. How does your measure controls to issue an opinion on their effectiveness? Meaning, most of the time you see an evaluation of controls, then there is no formula, you just make a judgment. My sample was 50, now I'm going to be 25. And of course, in this world, I have full population internal controls. What do I need to examine in more detail? Interesting question. Okay, and then there are these whole set of controls that are not automated control. They are manual controls. And anything that's automated is more reliable, really, maybe not, than manual stuff. Is that true? Anything that's automated is more reliable than manual?
Depends how you define reliable.
Possibility that the control is not working, is probability that the control is not working, is higher with manual processes or with automated processes?
Manual process.
I'd say it's equal.
Huh?
I'd say, I mean, I've seen a lot in automation where things fail just the way it's set up. So if you're trying to automate things, you add that extra component of allowing technology to do it.
Or they are deliberately disabled. Okay, typically manual things are more random, and I think typically automated things are more either yes or no. Okay. The project, the Siemens project that we did that generated the whole idea of CCM, continuous control monitoring, actually looked at things like credit limits in a bank. So there is a control saying that no one gets money, borrows money from the bank above his credit limit. So my credit limit is $20,000. I only can borrow up to $20,000. So can you rely on it? No, because there is a management override. Yehuda issues a check that will put him into $25,000. But the manager sees that and knows that Yehuda has $20 million in another account. Are you going to bounce his check? Of course not. Or you see that Yehuda deposited a check for the US government today that hasn't cleared yet for $100,000. Okay, so you know these things, you think that overrides of controls are a bad thing. Overrides of controls are a necessary thing for operation in certain cases. So in the Itaú project, when we had this verification, we actually, when we found an override of control, we went and investigated the override. And about half of the times, we didn't follow it up. The other half of the times, we sent a message to not to the bank manager, but the head of the region to investigate. And they always responded, yes.
And if it's an automatic system, then the override would leave tracks in the system and you can analyze that.
Okay.
But
so
manually...
That's possibility, yes.
Right.
Yes, and so you have a new additional step that you have to put in your audit process, looking at the overrides and trying to understand why the overrides happen. Or maybe doing an analytical thing, verifying this, if the frequency of overrides of manager Edward and manager Andrea are reasonably similar, or Andrea overrides all the time. And you would have to have a little conversation with Andrea about that, or fire Andrea, okay? We did the study actually the same data Sophia is working at this moment, that we are looking, oh no, also this was the 3-pound study, that we are looking at married sales. What is a married sales? Is when a bank manager, gives a loan, okay? And he says to the client, I'll give you the loan, but you have to open a credit card and you have to buy an insurance from us. But don't worry, after 2 days you can eliminate the credit card, cancel the credit card, and cancel the insurance. Won't cost you anything. Why would the bank manager do that?
Commission.
Commission. Commissions or bonus, go to Hawaii or best salesman, or et cetera, et cetera. So Siripan did this married sales prediction model, but before she did that, she actually ran statistics on managers doing that. And there are about 10 managers that did a lot of that, okay? And they actually finished up hiring 2 or 3 of those. But the top one, they kept him. Why? Because he sold a lot. And they decided that the guy was good enough that they wanted to, they just yelled at him a little bit and told him not to do it. And then he said, well, but I generate a lot of sales with that. So I don't know how was the resolution. But you know what actually I want to point out to you is that it's very easy to talk about rigid controls, but when operations go into the story, there are other considerations. Michael Ellis has several examples of that that he likes to use. And that's the idea of continuous control monitoring. You know, ERPs like SAP and et cetera, have configurable controls. You can reconfigure controls. And there are not a lot of rules about the configuring controls and et cetera. It's kind of second harmonic thing. And there need to be those rules, okay? Okay, and so this is the story. In general, corporate computer systems have thousands of controls embedded both in the legacy system as well in the ERPs. These controls are often intermingled downstream from many of the digital controls. In our work with Siemens, we have developed a methodology now frequently used that's called CCM, Continuous Control Monitoring. That was part of the audit automation offer, and compare configurable controls with the baseline. Actually, we got a call from Siemens and say we have about 200 SAP facilities. Can't remember the number or something in that thing. And we audit them once every 18 months. So we have a problem there. What do we do? And so what actually we suggested is create a baseline. So basically extract the configuration of the controls and compare it with a manual created baseline. This is the way it should be. And so if the parameters are different, you have an exception. A pretty simple pedestrian type of thing. This was actually Rod Brennan's dissertation. And Rod was actually the guy from Siemens that came to us with this problem, and he was doing a dissertation at the University in Canada, a distance dissertation. But really nice piece of work. We had a PhD student. Actually, she might have been an MIT student. Vasundara Shanduri, and she wrote what we call the proof of concept. And the proof of concept was kind of Visual Basic program that did this comparison and had a dashboard associated with it. Quite nice what she did. And then she actually joined the PhD program. Now she's Professor Shanduri at Mammoth College. And she hasn't wrote about that article, but she's writing articles on creating taxonomies automatically. So that was that story. Since then, I think both Caseware and ACL created a product, continuous control monitoring, and people tell me that I'm stupid, I should have got patents and made money out of it. But we don't do that. Our approach here is we develop something, we put it in the public domain. If someone else wants to develop a derivative patent, it's okay. Let them make the money. We are professors, we are not Stanford Research Institute that try to make money out of everything. Neither a school of engineering. And of course, every time we sign a contract or we work with a company, the issue of intellectual property comes up. It always happens. And our rule that we usually don't bend is we have the intellectual property, you have lifetime usage, and ability to create patent derivative usages. That's a good story. The bad story is that some guy that was in our conferences had a little method that every month he looked at the results of real estate and compared them. And if there was exception, he called it continuous audit. It was once a month, which is okay. And he did get the patent on the name continuous audit. So we had a conference here, and the last paper in the conference was a panel I put together on patents. And Raj was there that I mentioned at the AFC team for, because we got a patent together on what we called at that time Frank, which was kind of a text mining examination of things. And I put this guy on the patent panel, and there was a patent lawyer that was in the panel. And we never had a meeting that was so vivacious and aggressive. Some people took real exception with someone getting a patent on continuous auditing, and the guy had said that we had to pay him royalties and the application we did. So, like Trevor was a retired partner of Deloitte, really attacked him. And I lost a friend for life. He's a good friend, but we attacked him. And actually, I discovered that the people at Hewlett-Packard, HP, had actually applied for a patent, not on continuous audit, but on a derivative process, which was, and so they were looking at what was happening in the patent while this argument was going on. And I wasn't too worried, nor got too upset, because I had probably 20 publications on continuous auditing or more before that. It's just the idiots at the patent office that didn't look it up. So it never happened that someone was forced to pay right. I don't think his company went very far. Okay, but I don't know. That's interesting, thinking that your research has monetary value. And it's also interesting how absurd and obsolete is the patent process. It's really ridiculous. Okay. Although there has been close to 75 years work, now probably 100, in creating audit standards, of which I won't show this the PCOB, are nonsensical, anachronistic. Do you know what anachronistic means? Joanne, you know what anachronistic means? Obsolete, old, okay, passé, okay? Guys, if you don't understand words, because we move ahead and you don't learn it, ask. It's not embarrassing, okay? Which are nonsensical anachronistic. There has been little work in formal control assessment. So I have been begging Abdul Rahman to do a control dissertation. The work on controls could focus on two aspects: propose a method to formalize control assessment with quantitative income, propose a method to integrate outcome quantitative control assessment into rating or strength of evidence. This is very tall order, but probably the most important. Let me just say one thing about this that I'm passionate about. I'm very important. We spent many years developing auditing theory, many of them empirical, meaning many just from practice, not really. You think empirical, think of CompuStat. It's not necessarily CompuStat, okay? Many of them, the rules are, but Sarbanes-Oxley just happened a little while ago and requires this whole thing of opinion on controls. And although we have been doing evaluation of controls for 100 years, or 75 years, there is not an accepted methodology. of evaluating controls. And there is not a good literature either. So it's a very important question. And I always say, controls, you don't, I guess the next step of research is not an optimal way to do controls, but is a normative way to do controls. If you do control this way, you are a CPA firm, you can say, I follow my rules and this is established practice. You can defend yourself in court. We haven't had a lot of internal control cases in court, but it will happen. Have you ever heard of the Foreign Corrupt Practices Act? Foreign Corrupt Practices Act of 1977. So look at the year that this came out. And the name is Foreign Corrupt Practices. But in reality, there is a big control thing in it. Companies must be controlled. There is a whole thing on that. And there had been no litigation around Foreign Corrupt Practices Act until like 10 years ago, 8 years ago. Now it's a big topic of litigation. So some of the CPA firms or some of the law firms have specialized attorneys on FCPA lawsuits. And I had a couple of companies come to us and ask you, can you create a continuous audit methodology for FCPA violations, which I said no, because I didn't know how to do it. So it's very interesting. So this area of control assessment, and what I would think that the project here would be thinking about automated controls, traditional controls, their evaluation, and the schema. I have some references here, and they're a little bit. This is actually the one group that worked quite a lot in controls, and look at the dates, 85, 83, and what they developed, and this was a computer scientist, and Professor Winston, and Professor Bailey, who was an auditing professor, and Professor Cash, who was from Harvard, an ex-NBA basketball player, okay? And he's still at Harvard, and et cetera, et cetera. And they developed this thing called TICOM, the internal control language, and I refereed about probably half of these papers, because they didn't have a lot of people with computer skills that did the refereeing. I always thought it was an interesting idea. They had some formalization in there. They didn't get very far, but it was good. It was a great contribution to literature. And it's still probably the best thing that have, you know. The other area was this area we call reliability theory. And actually the main article in reliability theory is Cushing. And I think it's in your list. One of my PhD students, Ben Srinidhi, who is now in Texas, Dallas, but was in Hong Kong before that and was here before that, actually did his dissertation this area at Columbia with me. And nice work. I just don't think reliability theory applies very well to the modern computer system with controls. And basically what he does there, what Cushing did there, is models control systems as sequential or parallel. And these added together, these were in inverse formula. The reliability of this equals 1 over R1 plus 1 over R2. Okay, this is just arbitrary kind of thing, but we need something like this to quantify controls. Unfortunately, an ERP has tens of thousands of controls, and it will be very difficult to create a formula with 10,000 controls, or even 200, or even 50. Okay, so something else needs to be done. Also, I think in the area of ERPs, the thinking about controls have changed a little bit. Why? Because ERPs are what's called best of practice. How does one of these companies develop an ERP? Everyone knows what the ERP is, correct? How do they develop? They basically have a computer system with a relational database in the middle and applications around it. And they go to a company in the industry and say, buy this thing, and they adapt it for it, okay? And typically they say this is the best of the industry. We work with them, develop good controls, and et cetera, et cetera. And you know, SAP has over 30 industry models banks, service companies, manufacturing. Manufacturing is a big thing, okay? And so the thing is a little bit different because this is you in that stage of evaluating the engineering, the structure, like I said, the car as opposed to implementation of the car. This, you think that that evaluation, that structure is good because came from an independent company that did the best they could, they were selling the product, etc., etc. So you kind of, the evaluation, mainly obedience. And better than obedience in this case has been overrides and etc. It's a big question, the overrides. So you think differently about controls and no research about it that I know of. Some behavior research about use of control. And I would like to see someone work on this, not only to try to resolve the problem, but also to find out the literature so I don't have to look at the literature. I'm not going to work on this anyway, so. Okay? And this is actually more direct on is data evidence, about joining evidence, separate evidence, and et cetera, et cetera. I'm going to jump this because we're running out of time. There are some references I'll put here. Okay. I just had a reference here. This is actually Siri Fan's dissertation on predictive analytics. And she's the one that did the married sales, okay, study. And the results were pretty bad. Okay, the results were in the 70% predictions with machine learning techniques. And I was kind of distressed about the results, but prediction ability 70–75% wasn't very good. But she got her PhD. She published 2 papers that were first in the area of this predictive analytics area. And just recently, I had an insight. And I discovered somehow that her data provided by Itaú was a great project. They had the data already for us. This guy prepared the data, so Siri didn't have to do a lot of that. You know, very often preparation of the data, clean up the data, is half of the effort. Okay, and it just turns out that I realized that he had cleaned up the data. He took the outliers out. And of course, you know, this type of machine learning work depends on those outliers. Actually, is there designed to predict those outliers and to interpret those outliers. So I think the reason, I don't know this, I haven't reevaluated the data. I tried to get the dirty data so we could work with it, but I couldn't yet. But I still have hope. I sent an email to the guy who cleaned the data, see if he had a whole data set, but he left Itaú. He's with the Brazilian Stock Exchange now, so it's difficult, okay? But you know, our machine learning studies here have 95–97% reliability and et cetera, et cetera. So I'm just telling you, dissertation stories are interesting to PhD students. And you know, she got her PhD, she got to publishing. She is now teaching in Thailand. She has not disappeared, so we keep in contact. But I'm not going to ask her to reanalyze her data. Okay. I would rather have her work on something else. Now, this is her dissertation. Okay.